Well, friends, warm welcome to all of you. Hi, this is A.K. Aslani from Smart VRC. And today we have completed 21 years for Smart VRC. And in the celebrations, today is the last presentation, last webinar. And topic is pretty interesting, India shining, fasten your belts. We are entering into a next decade from 21 to 30. And lots of hopes. Let's see what is in store for us. So we must understand what is the size of India in terms of the GDP and how it can be impacted by the other economies, by its own population, by its own demographies. And India has a 4% of the GDP, of the total global GDP. And actually it is about 3.6. So in round figures, it is 4%. And when you compare with USA and Europe, they are 24% each. So now you can get an idea how big the USA economy is compared to India, and how big the Europe is and how big China is. China is almost 4 times bigger in terms of GDP than India, and USA is 6 times bigger. So from here, we get an insight as to how much an Indian economy can grow if it has good products, quality products, competitive products in the international market. That gives you a glimpse, that gives you an idea. So we are starting with a very low base for the year 2020. Overall performance was not at all good because of the COVID. So definitely for the next year, things will appear to be very rosy. And post-COVID, new world order will be there. And every time it happens, whenever there is a global disruption, a new order emerges. And there is a massive scope for catering to export demand, because the world is looking for a second source after China, and India is very rightly placed. India has huge growth potential, and it is there from last so many years and so many decades, and we are growing. We are tapping that potential. India is 3.5% of global GDP with 17.7% population. Now, compared to that, USA has 25% of global GDP with 4.25% population. Now, you can really appreciate population versus GDP. And that also gives you an idea how much scope we have. Lots of major reforms have been undertaken during the last 5-6 years. And for some or other reason, our country is not able to reap the benefits of those reforms. And this time it was COVID. Yes, we are fast transforming into a formalized economy. Small and medium enterprises are getting turned. Either they have to shut the shop, or they have to turn into a bigger company, bigger corporate. See, since independence, our economy has been growing gradually. Post-independence, our GDP was growing at the rate of 2.5%. Then gradually it increased up to 8%, 8.5%. And for a quarter, I believe it been touched 10%. But from last 5-6 years, 7 years, or rather 8 years, our GDP growth is hovering around average 7%. Nevertheless, even with 6 or 7% GDP growth and with very low rate of interest, as an investor, we don't have much options except for stock investment, and we will cover that more. And I firmly believe that stocks will continue to outperform other assets. And there is a very strong model, which I will show you why it happens so and why it happens so worldwide, except for a country like Japan. In rest of the countries, stock market returns are way ahead of other investment assets. So we have got very strong macroeconomic fundamentals, stable government, very strong reserves, and in fact, one of the highest foreign exchange reserves with RBI, anti-China environment. We have largest English population from last so many years, and the largest pool of youngsters. We are fastly transforming into a digital economy, as you all must have realized during 4 or 5 years, and especially during 2020. Even myself have made a lot of transactions on the net. Also, we have transformed from hosting these webinars from the internet. Via internet, earlier we were visiting the cities, various places, and very strong performance from IT, pharma, chemicals, and banking sectors. So these are the reasons why India is emerging stronger and stronger, and literacy rate is rising very fast, and presently it is near to 85%. And in 1980, it was about 41%. We have almost doubled, and now the further growth will be naturally due to be very slow. Youth population. India has the highest youth population. When I say youth, means less than 25 years of age. And that population is 35.6 crores. China at 26.9, and rest of the countries, there is no comparison as far as the absolute numbers are concerned. To give you a glance how big our banks are, the number one position is ICBC China Bank, that has a market capitalization of $432 billion. And now compare this with HDFC Bank, which has got only $108 billion of market capitalization. So this HDFC Bank is 4 times smaller. Not only that, China has a couple of more banks which are 2 times, 3 times bigger than HDFC, while in our country we have only HDFC Bank of more than $100 billion. Wells Fargo of US has $192 billion, and JP Morgan Chase again from US of $268 billion. And you can see 3 of them are already from China with 432, 327, and $365 billion of market capitalization. Compare this with SBI, which has a market capitalization of $34 billion. So this shows 2 things. One, our banks are our bank's market capitalization is very small, and you will be surprised to know that our bank's valuations are pretty high, probably because investors, big institutions, they believe they have that much of scope for growing bigger. Yes, simply a comparison with China will tell you how much big we have to grow and how much. To give you an example, like HDFC Bank, from last so many decades, I think from not less than 20-25 years, HDFC Bank share has given a CAGR return of about 22%. So even at this stage, it is 4 times smaller than the biggest bank of China. So that is the kind of scope we have, not only HDFC Bank, but even the other private sector banks. We have a lot of scope. Now, this is a story of a middle class. I got data up to 2015, and I'm very sure now we must be 50 million plus, 5 crores plus. This shows the data of the number of households with disposable income more than $10,000. So this data in 1990, it was only 2 million. That means only 20 lakh people, households, and now we are at around 5.5 crore. And this will keep on growing. at very fast pace because our total population is very high. And this also shows the scope for the growth in Indian economy, the corporate sector. Consumables. Now, what are the enablers for, if we are saying that India is going to shine for the next 10 years, then strong impetus to agriculture, Msme Stimulus. Recently we have seen government has given a lot of stimulus to this sector also. Real estate incentives provided, labor reforms, PLI, production linked incentive for API, that is the pharma and auto components, and lot many other sectors also. Government is continuously giving the guidelines and coming out with the schemes for production linked incentive. This type of strategy was used by China, and their companies, they captured many markets around the world. Defense, there is a lot of scope, and many big companies are tapping this potential. And we also covered a stock from defense 2 months back, and that is already up by 12%. IT BPO, there is work from home reforms. That was also a major reform. And one of the lowest corporate tax for the beginning companies, for the new companies. India has got one of the lowest corporate tax in the Asian region. So these are the enablers. And of course, it is very difficult to forecast what is going to happen 10 years from now. But at least we can say that where we stand today, and these are the enablers which can decide at least for the next couple of years, and thereafter it all depends what are the government's initiatives and how we progress. Not only how we progress, but how globally the countries make progress. Ease of doing business, you all must be knowing that recently the data has been released, and once we were at 134 position in 2014, and today we are at 63 position. We are doing pretty well, not pretty well, but very well. Well, I should say from last 2-3 years, and that is a good sign. This is the India's GDP, and as you can see, it is varying from around 4.5% to almost 10%. This is plotted on a quarterly basis. And recently, in the quarter of June, it turned negative to minus 24%. Now we are bouncing back. Hopefully, for the third quarter, we will turn positive. And by fourth quarter, definitely we will be positive. Now the question arises, where to invest? So these are the 10-11 sectors where I see a very good potential, especially in the export market. There is a huge potential for auto and related companies. Agro related also, there is a huge potential because the government is giving a lot of thrust, and about 60 to 65% of our people are engaged in agro related businesses. Banks, as I told you, we are way smaller than the largest one in the world. Chemicals, already a couple of companies have established their credentials and they're increasing their capacities. And there is a lot of potential, especially in the specialty chemical sector. In the defense also, 4 or 5 companies have become very serious about this business, and there is huge potential. And India has the capability to produce critical equipments used for defense or the components required for the defense. Hotel, because it is highly undervalued at the current valuations. IT and technology, as usual, they are the front runners as far as the exports are concerned. Infrastructure holds very good potential because government will have to take strong reforms as well as investments into the infrastructure sector. That creates a lot of employment, and there is the need of the earth. NBFC, yes, 2-3 NBFC companies are doing exceptionally well. And packaging, I wonder why packaging companies command so low valuations when the FMCG companies are commanding such high valuations. Pharma and technology. I don't want to make very big predictions because I'm a very small investor. I'm a very small advisor. I'm not of that level that I can predict what will happen 10 years hence. And 10 years is a very big time. And moreover, I don't believe in predicting or forecasting total economies. And I also believe that no one can do that. And these are some of the predictions made by who is who at the global level, and all failed. No one could, whatever they said, it could not come true. And even on televisions, I often hear that what will happen 6 months from now or 1 year from now, how inflation will go, how interest rate will behave. And I find that when actually it takes place, it is way different from what it has been predicted. And you will also agree with me. And even investors like Warren Buffett, he hardly tries to predict the economy because it is not possible. There are a lot many variables, and it is not a machine that you will input this data and you should get this data. It's not like that. Now coming to the topic, why stocks will give you the best returns. It will continue to give you the best returns, and the reason is I tried to find out why only stocks give the best return, and I would like to share my and my theory with you. So this is the corporate at the bottom. You can see this is a company, a corporate. It gives tax to the government. Government collects tax. So the income for the government is from the corporate, one of the incomes. Then corporate also give interest to the banks because they are well loan from the banks and other institutions, and they have to pay the interest. So the major income for the banks is from the corporate interest. Then corporate also gives salary to the employees. Basically, there are only two professions. Either you can be an owner of the business or you are an employee in a certain company. There is no third option. Right? So corporate gives salary to the employees, and employees with that salary, after expending into their normal operations expenses, whatever is left, they invest in gold, or they invest in stock market, or they invest in housing. And that is how the cycle goes on. Now you will find that the government, the bank, the corporate, housing, gold, all these institutions are receiving money directly or indirectly from corporate. So it is the only corporate. It is only corporate which makes money, which earns money for the country. All other assets prices are decided by secondary sources. So naturally, corporate has to make profit, then only others can get money, and then only the other assets can rise in prices. So the biggest profit-making institution is the corporate, and if you want to share their profits, then you have to buy the shares of this corporate. And this cycle will never end because government will always ensure that corporate makes reasonable amount of profits so that there is enough money flow, cash flow, and enough money into the system. And that is how the economy grows. If corporate does well, then they cannot give a hike in salary. Even there can be a reduction in salary. And if there is a reduction in salary, then people will not invest and the growth will come down. So government ensures always that corporate health is good. It improves year after year. Even government's own resources will come down. yes, once you invest into the stock market, the journey is not at all going to be a very smooth one. And in fact, there will be lots of ups and downs. And this has been represented by this model, wherein I have shown you a boat, which is nothing but the investments when we draw the analogy. And then this boat is fitted with a sail. And this, in terms of stock investment, this can be paralleled with strategic asset allocation. So whenever you find that your direction of investments is not okay, then you have to adjust the sail of the boat. As we adjust the sail of the boat so as to make its direction right. Similarly, in case of investments, you have to take help of strategic asset allocation. I mean to say, whether you have to increase the proportion of stocks or the gold or the real estate, whatever the other investment assets you have. So you have to take that decision. Suppose if you have started with about 40% of your investment in stocks, and for some reason it falls down to 25%, then you will have to increase its proportion. That is strategic asset allocation. And then we have the oars also. हिंदी में इसको हम चप्पू बोलते हैं, जैसे कि you must have seen. At times जो नाविक होता है वो इसको यूज करता है बोट को और थोड़ा तेजी से आगे बढ़ाने के लिए, and that is known as the tactical asset allocation. So this is how you will have to do practically जब हम stock market में investment करते हैं. So at many a times you will have to take some decisions in your portfolio depending on how the economy is behaving or how the market is behaving. Also, this same thing I have represented here by the shock absorbers. Under the normal stances, like presently, I believe is a normal. This is a normal market. I don't think it is we are into a boom time. And it's just normal. And at this time, my strategy is normally to keep the beta value of my total portfolio as unity and almost equal proportions of large cap, mid cap, and small cap. When we move up from here, when the valuations further move up, I would try to reduce the beta value and try to increase the proportion of large caps and reduce the proportion of small caps. Mid caps, I will keep almost the same. And at this point of time, the valuations will be pretty stretched one. As you can see, the tension of the springs, the tension of the shock absorbers, tension has reduced. That means if the market falls, springs will collapse. So that is why I'm keeping my beta value less than unity, because I know sooner or later market has to fall. I don't know when. See, mark my words. Sooner or later market will fall if it is at this point of time, but I do not know when. So I always remain invested, but only make the changes in the portfolio composition. Composition in terms of the market cap, in terms of the beta value. And whenever the market falls, as you can see the spring tension, they have pressed. At this point of time, I do just the reverse what other investors do. My portfolio becomes more of risky. I would not say risky, but more of volatile. I increase the beta value to about 1.2. That is more of small cap and mid cap, especially mid cap. I increase the stake in mid cap, and small cap and large cap are 20-20 and mid cap 60%. Why like this? Because if at this point of time, the mid cap companies have sustained, are able to tolerate this kind of economic distortion, then definitely they can come up very strongly whenever the market goes up. Still, at this point also, I do not know whether market will go down further or not. If it goes down further, then I will further increase the proportion of mid caps, because whenever the market goes up, definitely I'm going to win. And this I have realized during all the three major crashes from 1989, 1992, 2008, and now during the COVID times. We are way ahead of the market because of this strategy. But this should be used very carefully, and I would not recommend this strategy to be used by the fresh investors. It takes a lot of courage. It takes a lot of understanding of the market. Market means the stock price movements, valuations change. If you increase the beta value way early, then what will happen? Your stocks will fall down very fast. So the timing in terms of the valuations has to be very, very appropriate. So nothing to be feared. We need to understand that India is growing, and as you can see from this chart, the world's 10 largest economies in terms of the US dollars. In 2010, we were at 9th position, 11, 12, 13, 14, we were at number 10 position. And then in 18, we were at number 5 position. And in 19, we did become number 4, but due to COVID, now we are again at number 5. And as per recent forecast by the leading financial institutions, global institutions, India will again surpass Germany in about 2 years or 3 years' time. By 2023, it all depends on, even from here on, how India performs. So we have to only understand, we have to only keep in mind that India is growing. India is growing not only in terms of the population, but also in terms of the GDP, and also in terms of the total size of the GDP in the global economy. And this is the forecast. As you can see, India is presently at number 6. It will become number 5 and number 3 by 2030. And top 2 positions will be retained by US and China. And China will become number 1 maybe in 2040 or 50. But number 1 and 2 will be occupied by China, and USA, we will remain at number 3, at least in the foreseeable. So there is the chart from 1990 to 2020, and 3 decades, that means 30 years is a pretty long time. And during this 30 years, on 1st of January 1990, Sensex was 783. Yes, I have seen this index. And this was the time when I think steel sector was deregularized. And during this time, Sensex has given CAGR returns of 14.68%. I'm very sure you will all agree with me that we are much better off what we were 30 years ago. What we were in 1990 economically, we all are doing much better today. And this holds good even for our parents, even for our next generation, it will hold good. We didn't have mobiles in 1990. Now we have mobile, we have internet, we have television, and all those things are there. Luxury items are there. Naturally, we are progressing, and we will keep progressing. Who knows, some other investment, such device will come, and we will be holding that device, and maybe that device may cost 1 lakh rupees. Today, we are spending about 10,000 rupees, 20,000 rupees on mobile. Maybe 30 years hence, we may be holding a device worth 1 lakh or 2 lakh rupees, and it becomes a necessity. But we will hold it because we are progressive in nature. It is a human tendency that we have to progress, and that is why corporate will find the ways and means to earn for them and for their shareholders. This we have to understand very well, because until and unless this thing is clear, this what you perceive about the market, until your perception is clear, it is very difficult to make returns. If you are very much glued to the market levels, market numbers, stock price numbers, then it is difficult to make profit. So if for 30 years, there are very many ups and downs, and even just in the month of March, we have seen that our portfolios came down by 40%, 50%, even 60%. And then how we bounce back by more than 100%. So this is going to happen. This is a regular phenomenon. But at that time, you will be, we have seen that how BSE sensitive index has generated 14.68% CAGR for 30 years. And you all are with me that we will continue to grow. And even if you have invested in Sensex, that means no need to look for the market day in, day out, or for your individual stocks. Then also, if you are making 14.68% returns, then you can very well think how much you can make if you have got a good advisor with you, or if you have your own expertise in it. Like we are making 25% CAGR, 25.5% CAGR. So with 14.68% CAGR, you will double your money in 5 years. So in 10 years, you will multiply your money 4 times, right? With 25% CAGR, you will multiply your money 10 times in 10 years. That is the power of compounding. With 15% returns, you will multiply your money 4 times in 10 years. With 25% returns, you will multiply your money 10 times in 10 years. So investment of 5 lakhs may turn into 50 lakhs. That is the power of compounding. The only thing is you have to be passionately rational. You have to detach yourself from the profits and losses. You have to concentrate on your company's story. There are 3 things. One is the company. Second is who is heading the company. Means the CEO. Means who is the person who is the overall in charge of that company. And third, the valuations. If any stock which is meeting these 3 parameters, then you have to remain invested. That's all. No need to look where the share price is moving. As long as the story is intact, as long as the company is intact, company is regularly paying dividends, and if it is increasing trend, then it also shows that the cash position is good. That is all what is required to be seen. And there are many, many companies. I have given an example of HDFC Bank, for which you will agree, you need not have to keep on calculating what is return on capital employed, what is EBITDA margin, and all those things. Not required, simply not required. So you have to find out such companies and stick with them. As I say, nothing to be worried, only to be understand. Only we have to understand. Economically, there will be new law, yes, and all businesses are required to transform and adapt to the new normal. We are already seeing corporates all around the world, including in India. They are looking for innovative and creative ways, and they have found out to meet these difficulties. We will have to work out. I mean to say the governments of the respective countries will have to work out to boost consumption. In US, what they did, they have given free money. They have given free money to MSMEs so that their employees are intact in their firms with a certain sort of guarantee also. If employees are continue to work, then that means the consumption will remain intact, and that is how they are trying to maintain their economy. But that is very risky. If you give too much of money, too much of stimulus, too much of cash to the system, inflation will take place. And in that way, I would say that the Indian government has taken a very right decision. They have not given free money. They have given stimulus to only the needy, the neediest person, neediest section of the society. Every now and then, you will find that there will be experts who will predict that everything is coming to an end, and we are in a horrible shape, and all those things will be there. And we are human beings. We are always, our emotions are always there. But I will tell you one very simple example. Suppose you are doing a job. Okay, you are not a businessman. You are serving some company, and there was a severe slowdown. Like in pandemic, you have seen there was a severe slowdown, and your company also you have seen was passing through very challenging times. Did you quit the job? Did you quit the job and because your company is not doing well? No one did that thing. And did the Tata or Reliance, means the Ambanis, they close their business? No one closes, because they will find the ways. Even you yourself are confident that yes, company will sail through. But then why you are so much desperate to exit from the stocks? It is one and the same thing. Maybe you are working in a company which is listed on the stock exchange, and some other investor is already invested in that company, in your company. But you are not quitting the company. But that investor will try to make an exit because he is worried. So that is the difference. Think like that it is your company. When you are investing, think like that it is your company, and you need to have the confidence on the management that they will find the ways and means to pass through this challenge also. That is the best way to understand this. In the long term, hardly 2 to 3% investors survive, and to my understanding, not even 1% investors are thriving. Yes, that is a fact. You look around yourself and find out how many investors are there who are investing from last 25 years or 30 years. You will not find even 1%. That is the reason why I keep on giving you the advice to invest for long term. Think from the top. Always look from the top. World is not coming to an end. World will never end. That is what I meant. Change your paradigm. Paradigm is nothing but the collection of beliefs and concepts you have about the stocks. You build your own theory about the stock market, about the stocks. Most of the successful investors, when you listen to them, you will find that they will tell you invest for long term. They will tell you something which you are not doing it. They will tell you forget once you have invested in good company, but you don't do that. Every day we need to look at the stock price, what is happening around it. Every day you are stick to the television. I don't watch television. I've not seen any business channel from last so many years. Yes, believe me. Often people call me and say that such and such advisor on television has said like this. Did you heard? What is your perception? What is your idea? So because I don't watch television, how I can comment on that? And that is the best part. In fact, once you have selected your stocks, try to remain away from the media. Media, when I say media, means what the advisors are saying or what the television people are telling you. Because in most of the times, you will be misguided. Yeah, we are starting tomorrow, day after tomorrow, New Year will start. And many investors have the excuse that they don't have the money, they don't have the experience, or they are too young. At the age of 25, is a real case. My cousin's sister's daughter, she joined a hospital in Mumbai. She's 25 years old, and I asked her to plan for the retirement, and she laughed like anything. She says that at the age of 25, when I am joining this job, and I've just started the job, and you're asking me to plan for retirement. So that is the case, and most of the youngsters think like that. But awareness is coming, and that is the right time to invest. Increase on your investment in stock market to an extent when you start feeling the pinch in your monthly expenses. That is the best way. And this is something when I joined my company in 1988, I used to think something like this. There is no way I was born to just pay bills and die. You must do what you like, you must pursue your passion. So I, on behalf of Smart VRC, invite you to be part of our enthusiasm, and we all look optimistically towards a bright and profitable future and promise to live up to beyond your expectations. Yes, that I promise as a fiduciary advisor who will always keep your interest above us, as a coach, guide you from time to time, not only in terms of the stock advice, but also guide you in terms of the emotional ups and downs, and not to say excellent personalized services. I wish you all a very happy new year. And don't forget to fill the quiz. You have to participate in the quiz. And whatever score you make in the quiz, we will provide you a stock, this smart stock of the year 2021. That stock will be provided in your email. Maybe today, late evening, that will be delivered through email in your inbox. So after this presentation, there will be a question and answer session. And those who have queries, they can write into the chat box, or even they can raise hand in that chat box. I shall reply one by one. Thank you. Thank you very much. Mr. Ravi Kisan?
Yes, sir.
Yes, sir.
Great session, sir. I just enjoyed it.
Thank you.
Like always.
Yeah.
So you have pointed out some really nice things, and for sure, the gist of that is that we don't have to worry, and just we have to believe in the Indian story that we all believe in for sure. And then your presentation made it more firm. Thank you very much, sir, for that.
Thank
so
you.
my question, my question is that, sir, we are reading too much about the FII's money is being pumped in India because of the cheap availability of US dollars, because of the printing of the dollar that is happening back home in US.
Yeah.
And then will there be any repercussion of that? Because mostly when I see, because when I check and see how much amount of, whenever the market goes up, I always see that it is only the FII's money which is being pumped up. DIIs are coming out of it. So basically my point is that what if tomorrow, if they get, because they are the easy money, they can move it to any other emerging market where they feel there is a better chance to grow their money than India. So it is just a business. It is just a business that they will do. So will it, how will we sustain that? Because right now the very cheap money flowing to India, I suppose tomorrow there is either the money print stop, or they get any other options emerging in the emerging market, including China or somewhere else. How will it affect the market or the bull run that is happening right now?
Okay. FIIs were net sellers in the month of March, and that was the reason why the market fell, and domestic institutions were buying. So that was the opportunity when we should have also purchased, because it is like this. Suppose the real worth of the stock is here, and share price is also here. And if it is truly matching, then I will not get an opportunity to buy this stock low and sell high. I want that the share price should either come low or it should go high. Suppose at this price I have purchased. Okay, it is rightly valued at intrinsic worth. I have purchased the share. Now I am waiting that this share price either should go up or should come down. If it goes up, substantially up, then I will sell. If it comes down, then I will buy more. That should be the strategy. If FIIs are again and again buying and selling or if DIAs are buying and selling, then it is a good for you. It is an opportunity. We should not fear that what will happen when FIs will get out. They have exited number of times during the last 20 years, 25 years. So we should not worry. We should be very happy. Believe me, when the market falls by 5,000 points, I am the happiest person. I don't show the happiness because investors are not happy in general because their wealth has been eroded. But in reality, you should be very happy that you have got an opportunity. You should believe in the India story. You should believe in the economy, not only in India story, but at the global level. At the global level, we are rising. We are improving our standard of living, and we will keep doing that. So that should be the thinking. And we are not in a position, I'm saying not only me, but no one can predict that when FIs will make an exit. So the thing which we cannot do, we should not dwell into that, and we should always have hope. We should always love the volatility. Volatility is not risk. You should try to differentiate. Risk means losing your capital. If you are invested, if you have the confidence into the company, then remain invested. You will not lose capital. It is only the volatility. It is not you are losing the money. Hope I answered you.
Yeah, sir. More than what I could have
Okay.
expected. Thank you.
Thank you. Mr. Rajesh Agarwal, kindly unmute yourself. Yeah. Mr. Rajesh Agarwal, I am not able to hear you.
Hello.
Yeah.
Respected Anil sir, I am Rajesh Agarwal from BHEL.
Okay.
I know you since my childhood, and we have grown together. And I know your passion for the stock market since my childhood. And I have seen that you have turned your passion into your profession, and that has made not only successful for you as well as for many of people like us. So many thanks for your support to all of us. Sir, I would just like to say that what you have presented for with respect to India shining, that Indian economy is growing with respect to GDP and all. We are in government sector, so we are also seeing that government is taking many steps for increasing domestic productions and putting a stop on unnecessary import from the countries like bordering India. So there is a lot of hope for Indian industries, and even if 25 to 30% of the imports are being converted into domestic production, it will be a huge boost to the Indian economy. So I feel that definitely India is going to shine in terms of economy. But largely, what I feel that ours is like a consumer economy because of our population and all these things. That's why our GDP is rising. So how the technology part and consumption part will balance in future, like innovation and consumption. So how it will happen in India? Can you throw some light on it?
Yeah. Thank you, and very interesting sort of, I can say, a debate. There are basically three sections where the economy grows. So one is the export, other is the consumption, and third is the infrastructure development. In India, we are very fortunate being a developing country. We are not developed country. We are developing country. We have vast scope for infrastructure development, and this thing is not available to the developed countries like US or Europe. They have very limited scope for spending on infrastructure. So if India wants to increase the employment, simply spend on infrastructure. And that is what is going to happen into the budget. Most probably, government will spend a lot of money on infrastructure development and create jobs. And that will Job creation means that will add to the consumption and thus the growth of the economy. And secondly is the export. As I have shown you, India is a very small, India's GDP is very small at the global level, and we have a huge markets. So on all the three fronts are open to us. Now compared to this, to China has made lots of investment on infrastructure during last 10 years. And now they are also almost saturated. They cannot invest more on infrastructure because that will not deliver the results they are looking for. So they were dependent more on exports. Now their exports are also hurting. So they are concentrating on consumption. That is how the countries are taking, the respective country governments are taking action. Coming to the USA. USA is not a exporting country. USA is not spending on infrastructure. They are purely consumption driven economy. And that is why you will see their government comes out with policies, with stimulus, which is directly focused on the consumption. And that is what I would like to add to this. And I don't think India has a lot of potential on all the three fronts, whether it is infrastructure development or consumption or exports. Hello, Rajesh. Hope I replied to your query. Okay. Mr. Amit Desai. Mr. Amit Desai, yeah.
Yeah. Good evening, Mr. Asnani. A good
Good evening, sir.
presentation. A good presentation again.
Thank you.
And the topics very well covered. Just a quick question I have. Just from your experience, I'm talking about I have bought some stocks at high valuations, which have done very well over the years. Even though the entry level PE was high or PEG was high, I'm just wondering, since you are a value investor, have you relaxed your rules and bought a certain stock even though it was at high valuations by your valuation standards, and it turned out to be a great investment for you? That is my question. Stocks like Asian Paints, you spoke about HDFC Bank or Berger Paints or Astral Poly. All these stocks, if you see, they have been expensive even 15 years ago in terms of valuations.
Yep.
But they've all gone on to, generate huge wealth. They've compounded big time over the years.
Yeah. See, what you said is right. About 4 years ago, and one of my relatives, she asked me whether she can invest in Hindustan Unilever. And I said that I find that stock overvalued and I would not invest myself, and I have never invested in Hindustan Unilever. So I do not know whether she purchased that stock or not. But today, as on date, that stock is up by almost 100%. And I don't have any regrets.
Right.
Even if it falls down to 1,000 rupees, I'm not going to purchase. Because every investor should have his own philosophy. Just not because the stock price has doubled, so I should invest in that. It is a quality, but quality at what price, at what valuations? At a P of 40, 60, 80, 100, 200. There should be some measure.
Yeah.
So if there are 4,000 stocks available, why should I concentrate on Hindustan Unilever or Asian Paints? You are right. Hindustan Unilever, Asian Paints, and there are many, many companies which are quoting at astronomical P ratios. And there are reasons. Reason is like FI. If suppose foreign portfolio investors there and they want to invest, so there are only limited companies with excellent management that they can invest. And even if there is a company from the mid-cap category, they cannot invest because they purchase lakhs of shares or crores of shares, and so much of liquidity is not available in mid-cap stocks. Right. So they are very restricted. They have got very limited options. And that is why they have no other way but to invest in the companies like Hindustan Unilever or proven blue chips. Even though they also know that they are high priced, highly valued, but still they invest. And that is the reason why its P goes on increasing, because investors, FIs after FIs, they keep on investing in such stocks. And looking at this, investors also think that yes, this is the right way because that is the stock. Look at Hindustan Unilever, it has increased at the rate of 20%, 22% CAGR from last 10 years. And this is the company to be invested. But if you look at the EPS growth rate, it is hardly 11% or 12%. So I'm looking for companies which are going to be tomorrow's Hindustan Unilever. I'm not looking for companies with a P ratio of 80 or 100.
All right.
To give you an example,
Yeah.
To give you an example, we have identified many companies like GMM, Fowler, Granules, and many examples are there. Bajaj Finance also we identified in 2011. In 2011, many FIs or even many domestic institutions, they also knew that this is the company of the future. But simply they cannot do anything because liquidity was not there. They cannot buy lakhs of shares in a day. So wherein that is the category of the stocks where the retail investor has an edge, has a very big advantage. If you have invested at that time, then you have to simply wait. Company will come out with bonus or split or some offer for sale. Something company will do as it grows, and it happened in Bajaj Auto also, and it happens in almost every company. It happens. Whichever there was a time when even Videocon Industries, if there are investors, I can see Mr. Kuldeep Sandhu. He is with us from I think from the year 2000 to 2001. And that was the time when Videocon Industries kind of stocks, there were the blue chips. They came out and expanded their capital, equity capital, and that is how the retail investors gain. So, yes, I have relaxed PEG rules. Earlier, I used to make an exit at a PEG of 1.75. Yesterday also I said the same thing. And now we have increased it to 2 because there is excess liquidity available in the system. We cannot continue with the same old rules.
All right. Okay. Thank you. That was really well explained. And I just want to tell you, your performance has been excellent and you're doing great work. And, keep up the great work and wishing you a happy new year.
Thank you. Thank you very much. Mr. Kuldeep Sandhu, are you able to hear me? Would you like to say something? सर आप अपना माइक आपका म्यूट पे है, उसको अनम्यूट करिए सर. सर आपका माइक म्यूट पे है सर. हाँ बताइए सर.
ये जो सिस्टम है जिस पर आप ट्रांसमिट कर रहे हैं, इसका हमें प्रॉपर्ली यूज नहीं आता.
जी कोई बात नहीं सर.
अभी तक हमने कभी ये जो था स्मार्टफोन भी प्रॉपर्ली अभी तक यूज नहीं किया था. अभी रिसेंटली 6 months हुए जब यूज करना शुरू किया है. इसकी प्रॉपर कोई एजुकेशन नहीं है कि कैसे इसको प्रॉपर्ली यूज करना है.
सर पहले आपके पास जो आता था वो प्रिंटेड फॉर्म में आता था स्मार्ट गेम्स. अभी क्या हो गया सर, सब ऐप पे आ रहा है और इंटरनेट पे आ रहा है. तो आपको आप कभी हमको फोन करिएगा सर, प्ले टाइम में आपको हम उस पर आप एक्सप्लेन कर देंगे. और हमने कुछ वीडियोस भी रखे हुए हैं सर, हमारी वेबसाइट पे कुछ वीडियोस भी हैं, वो भी आप देख के समझ सकते हैं, या आप अपने बच्चों से भी पूछ सकते हैं सर कि कैसे यूज करना है. आप मेरे ख्याल से सर हमारे साथ शुरू से लेके हैं 2000 से लेके आप हमारे साथ हैं.
बल्कि 99 I think from 99.
Yes. With us from 99. Yes.
When you had published just 2 papers only. Yeah.
बहुत अच्छा लगा सर. आज आपको, कल भी मैंने आपको देखा था, आज मेरी बड़ी इच्छा हुई कि आपसे एक बार बात की.
नहीं, फिर भी आपसे फिर करेंगे जी.
जी बिल्कुल.
बहुत खुशी है कि आज आप 21st ईयर मनाने वाले हैं.
थैंक यू सर. थैंक यू.
मैं आपको ये खुशखबरी दूंगा कि मेरा आपके साथ जो SBP है उसमें फुली इन्वेस्टेड हूँ.
अरे वाह सर, बहुत अच्छा.
मेरी 1 साल से जो मेरी फॉलो है, इट इज वर्थ 1 crore.
अरे वाह.
So besides your SPV, I have many more investments. It's worth around 1.5 crore.
Okay. ये हम सबके लिए एक एग्जांपल है. आप सर की अगर आप वीडियो देख सकते हैं तो आप देख सकते हैं. आपकी एज कितनी होगी सर?
मेरी नाउ है 83rd ईयर.
80, 80, 87?
83rd.
83rd. सर इज 83 years old. और ऐसे आपको रेयर इन्वेस्टर्स मिलेंगे जो 83 years एज में भी आज भी इन्वेस्टमेंट कर रहे हैं. एंड चियर सर, बहुत बहुत धन्यवाद सर, आप आए, मुझे बहुत अच्छा लगा सर. मैं आपसे
आपका भी बहुत बहुत धन्यवाद. थैंक यू सर.
थैंक यू सर.
आपका साथ मिला और हम अच्छे ऐसे चल पड़े.
जी जी जी.
और आई स्टार्टेड दिस वर्चुअली आफ्टर माय रिटायरमेंट.
ओके. हाँ, नेचुरल है सर. अभी आप 83 years के हैं. तो आप 20 साल पहले, यानी कि तब आपने रिटायरमेंट के बाद सर ने हमारे साथ ज्वाइन किया है. और मैं आपका नाम इसलिए जानता हूँ सर कि वो टाइम में मैं पर्सनली सबको वो लेटर पोस्ट करता था जब फर्स्ट इश्यू जब था.
बिल्कुल.
या थैंक यू वेरी मच सर.
थैंक यू टू सर.
यस सर. या मिस्टर किशोर पुरस्वानी.
अनिल जी, मैं सिर्फ संधू साहब से बहुत प्रभावित हुआ हूँ, इसलिए हाथ रेस किया मैंने.
जी जी.
संधू साहब हमारी नमस्कार स्वीकार कीजिए. एंड यू आर एन इंस्पिरेशन टू ऑल ऑफ अस.
संधू साहब, आप माइक आपका म्यूट पे है, उसको अनम्यूट कर दीजिए. हाँ सर.
संधू साहब, यू आर एन इंस्पिरेशन फॉर ऑल ऑफ अस. वी आर प्राउड ऑफ यू सर.
थैंक यू
सो मच फॉर
रियली ग्रेट. बहुत अच्छा सर.
बहुत अच्छा लगा सर.
थैंक यू.
बस अनिल जी, मुझे यही कहना था साहब से.
ठीक सर. थैंक यू सर. थैंक यू. सो दैट इज रियली वेरी अमेजिंग. और मुझे भी आज बहुत अच्छा लगा संधू साहब से. ऐसे उनको मैंने कभी देखा भी नहीं था. दिस इज द फर्स्ट टाइम. यस्टरडे कल उनको मैंने देखा था स्ट्रीट पे. मेरी इच्छा हुई थी, लेकिन कल बहुत टाइम हो गया था, तो मैंने सोचा आज सर से दो बात कर लेते हैं. विद दिस वी कम टू द एंड ऑफ दिस प्रेजेंटेशन. एंड मैं आपको एक बार फिर रिक्वेस्ट करूंगा कि आप प्लीज जरूर पार्टिसिपेट कीजिए. एंड चैट बॉक्स में भी क्विज का जो डिस्क्रिप्शन था वो मैं दिया हुआ है. एक बार दोबारा हम उसमें चैट बॉक्स में मैंने दोबारा आपको वो लिंक दे दिया. यू कैन कॉपी दैट लिंक एंड यू कैन क्लिक दैट लिंक एंड क्विज को आप पार्टिसिपेट कीजिए एंड यू विल गेट अ रिपोर्ट टुडे. मे बी लेट नाइट भी हो सकता है. विद दिस आई एम वेरी मच थैंकफुल टू यू, ऑल ऑफ यू. सभी को मैं बहुत बहुत धन्यवाद. आप लोग बहुत कीमती समय अपना निकाल के यहाँ पे आए और मुझे भी बहुत अच्छा लगा. आई रियली एंजॉयड. आई मेट विथ मेरे पुराने सब्सक्राइबर से भी मैं मिला, कुछ नए लोगों से मिला, कुछ बहुत हाई लेवल के नॉलेज रखने वाले लोगों से भी मेरी चर्चा हुई. मुझे बहुत अच्छा लगा. एंड होप मैं आपकी एक्सपेक्टेशन पे खरा उतरूं. थैंक यू वेरी मच. थैंक यू.